Welcome everybody to our next live stream. Today we're going to be going over who lost, exactly what they lost, and the consequences of them losing and the unthinkable happening. So go ahead and let me know if you can all hear me in the chat, and we're going to get into this next live stream. It's a bit different. Going to be doing it earlier. It's pretty much late here in Australia, but in today's live, we're going to be talking about what happened yesterday, and it was very, very interesting to see the reaction on what happened yesterday in the market. So again, go ahead and type one if you can hear me in the chat below. I was going to wait for more people to tune in. Yes, you can hear me. Okay, fantastic. So what we saw happen yesterday, and again, what I'm alluding to, they lost, the unthinkable is happening next, is the central banks have lost the battle to inflation. We saw the CPI report come out last night, and it was much, much higher than expected, okay? It came out at 0.6% month over month. Now, when you analyze that, that is 7.2%. So we should have seen an absolute bloodbath in the markets yesterday because interest rates are already 5.5% in the US. Many other central banks around the world are over 5%. The Australian Central Bank, the RBA, they're complete cowards. They've only got interest rates at 4.1%. But we did get more data in Australia today that the unemployment rate is still apparently pretty low. So that's going to be more reason for the RBA to hike, especially with the Aussie dollar tanking. But, sorry. What I really want to talk about is how central banks have lost the fight to inflation. Again, with the CPI coming out yesterday, 0.6%, and the markets not selling off, what I think this means is the insiders at Wall Street know that the central banks aren't going to do what needs to be done to stop inflation. And it's actually been amazing to see them lift interest rates from 0 to 5.5% and not even put a dent in inflation. The jobs market is still very tight. GDP per capita is falling, so that means per person. The only reason why the economy is still growing is because prices are going up, and also because of record immigration. Also in the US, GDI, that's gross domestic income, is actually in a recession compared to GDP. But again, this is very, very concerning that after all these rate hikes, inflation is surging yet again. Now, also some very big issues for the US is another big reason why inflation hasn't been as bad as it could have been. And again, this is CPI data. As you all know, the real inflation figures are at least double that. But they've been draining the strategic petroleum reserves and they're at record levels. Now, this is a very dangerous move the US and the Biden administration is doing, because what are we seeing around the world? The geopolitical tensions are getting close to boiling point. We're seeing Russia teaming up with China. We're seeing the US and the China relationship is deteriorating rapidly. And we just saw a meeting with North Korea Supreme Leader Kim Jong-un meet with Putin. And they're looking like they're going to team up against the West. And at that time when, the geopolitical situation is so risky, when a global conflict could break out, the US SPR reserves are at all-time lows. This is very, very dangerous. And we're seeing what's happened with the price of oil spike to over $90 per barrel, it's around $92 per barrel. If they have to refill those strategic petroleum reserves right when they're all-time lows and right when oil is surging, when the Saudis and OPEC is reducing production, well, we're going to see oil spike. But again, my message I want to talk today, I guess a lot of you guys are chatting data or data. If you want to talk about, I think the reason why we didn't see an absolute bloodbath in the markets yesterday is because people on Wall Street, they may have some insider information that the central banks are going to give up on the inflation fight, because interest rates are already at such critical levels. And remember, what caused the crash in March with the banks? What caused the bank failures? It was central banks lifting interest rates up so rapidly. So if central banks do what they need to do now and do another 2 or 3 more interest rate hikes and bring the interest rates up above 6%, well, then all those government bonds all these banks are holding, all those mortgage-backed securities, residential and commercial, will crash in price. Because how it works is, when interest rates go up, why would you buy a bond that's paying 4% interest when you could buy a bond that pays 6% interest? Okay? And I think this is why the central banks are so scared and why the markets didn't absolutely sell off yesterday. Again, because they know the central banks do what they need to do, like what we saw in the 70s and 80s. Remember when Paul Volcker came in, he had to jack interest rates up to 17 and 18% in order to stop inflation. Now, we may need a kind of Paul Volcker to bring inflation down, but I think in the political environment we have today, where nobody wants to lose, everyone wants a participation trophy, and all these big banks to just get bailed out instantly. Remember what happened with Silicon Valley Bank? Normally what happens when a bank fails is only deposits up to $250,000 that get covered. But what did the Federal Reserve do? Well, they had a lot of billionaire friends in Silicon Valley that had billions and billions of dollars of deposits at that bank, and they bailed out absolutely everybody, which is absolutely outrageous. Okay? If you have a business and you run it badly, you deserve to fail. That's how capitalism and free markets work. But unfortunately, we don't have capitalism, we don't have free markets today. And that's, a lot of people get confused. They think capitalism is the reason for a lot of problems and inequality today. But no, it is socialism for the rich, for the oligarchs. They get bailed out, and then it's capitalism for the poor and middle class. That's the reason why there's so much inequality. Because the people at the top, they're competing at a level we can't compete with. They can get unlimited amounts of free money or cheap debt. And when things go bad, they can take on as much risk as they want. And if they make a mistake on that risk, well, then they can just get bailed out straight away. So, okay, what you're probably wanting to know is, we need to reassess, and what is the next play in the markets? Well, it's really 50-50. We're going to have to see what the Federal Reserve says at their meeting on September 20th. Now, what they need to do is they need to hike interest rates again. It's clear. We can see the data here. Inflation is surging again. Okay, but if they don't, what could happen, and this is what I've been talking about all along, a huge, huge risk is we could see central banks give up the fight to inflation and we see a market melt up. That's where, even though the economy is crashing, if they let inflation rip, will all assets priced in the dollar will go up, okay? So if they give up on fighting inflation, we could see the dollar fall, we could see borderline hyperinflation, and then we see all assets hyperinflate. So that's why you always want to have some gold, silver in your portfolio. You want to have some Bitcoin as well, because when does Bitcoin perform the best? It performs when there's a risk on environment and when inflation is high, okay? And what could even possibly happen next year is they could cut interest rates even though inflation is surging and the economy is crashing. Now, what you have to remember, the economy, the banking sector, okay, and the markets, they're completely separate. So the economy could be tanking, but if the market is receiving stimulus, if interest rates are dropped, okay, the market could love that. So we are at a huge pivotal point in time in history right now. Again, like I said, okay, it's going to go either way. Either the central banks do what they need to do right now with this new data we got out to stop inflation, but if they don't, we're going to see hyperinflation and we're going to see a market melt up, and you want to position yourself. Now, on top of gold, silver, Bitcoin, there could be some miners that could perform well, some commodity companies that will benefit from commodities surging. So what do you think? Okay, I'm just reading the chat here. So what do you guys think about this? What do you think the Federal Reserve should do? Type 1 if you think they should hike rates at their next meeting, or type 2 if you think they should start cutting rates. Again, this is quite sad to see what's happening. But everyone, that was just my thoughts on what's happening in the markets right now. The central banks have lost the war to inflation. There was a few battles they won with inflation dipping a little bit, but I think they're ultimately going to lose the war. they're going to sacrifice the poor and middle class in order to keep the markets pumping. So again, everyone, thanks for watching. You're awesome. I'll see you all in the next video.